live. We're unmuted. We're good. We got a screen going. Everything is happy. It's Friday. Just so everyone knows, I will have to cut this stream a little bit short. I have another dental procedure today. It shouldn't be anything super intensive, though, but I probably won't be able to talk afterward. But I do have to be there at 11, so I got to jump off here around 10:15-ish to make sure that I have time to get there. Just so everyone knows, I'm still going to live trade and all that good stuff. One thing that I want to do right now is point out that this one, this is BLDP. This is one of the, well, I'll just show you guys. This is one of the bigger positions that I've been trading on the 50K portfolio. So this right here is the 50K portfolio. We use the buy down strategy. You can see the 3 buys here. So I bought one here, right, using the same strategy. I just didn't stop out because it was a first buy. But I bought one right here on this break. That was my first buy. And then I averaged down about, I think it was like 15 or some odd percent. I bought down here at this level. And then I was watching the 219 level down here earlier, but I got to talking to Mule and he pressured me into it, guys. I didn't have a choice. I'm just kidding. So I bought a little bit early. So my average was kind of here, right? And all I did is just, there was 10,000 in it. So I did a $2,500 buy, $2,500 buy, and a 5K buy. And then I just wanted this area to hold. So if it kept going, I was going to stop out. Otherwise, I'm good. I've reduced it now to my first buy. So my first $2,500. So let me just show you what that looks like here. Just so you guys can kind of see it for yourself. So, oops, not that. I don't want that. I want this. I want to grab one of these guys. I can't grab that. Anyway, there's only one of these now, and 3 of these are down here. So basically what I've done is I've taken $7,500 and I've put it back in the pool that I can use for other trades. So some of these trades are small first buys. Most of these are. And then there's 2 of these right now, which are the large buys. So I just wanted to buy these. And then actually this one here, I got to stop out of. So this was a 10K buy, 3% risk. I just took a small stop on it, and that's okay. So that's using the same strategy, but it just happened to dip down below my stop loss. Give me 1 second, guys. I'm sorry. All right. Sorry, guys. I'm back. Okay, so let's get into the meat for today. So first thing I want to do is look at the tops list or Lee's watch list or any other high volatility input list, right? So in this case, if I go over here to my watch lists, I'm going to go to today, right? Oops, today. And then I'm just going to clear these out, right? I always like to start fresh, and you don't have to trade in the first 5-10 minutes. That's where a lot of people get messed up. We don't need to just jump into stuff. It's okay to just let stuff go for the day. So that I just kind of want to put my mouse over these and kind of see which ones have somewhat decent potential here. You could just put your mouse over the sparkline column and it'll show you a chart. And if you look at the chart, it actually updates in real time. So I do kind of like VEV, but I don't like it because it's sub-dollar. So I'm not going to be jumping into that one super aggressively, but I just want to add it to the today watch list. And then I want to do the same thing for Toyo, sorry. I'm just going to add that to today. And then CGBS, I like all 3 of these top ones so far, right? And I don't really care that they're going up or down. I just like the fact that they're moving. That's all I really care about. NISN, it's looking like it's headed for a retrace here, but I'm not sure how I'm going to feel about that. And then the other thing I'm going to do is kick this down to a lower time frame because I need to be able to see what's going on inside of this stuff. All right. Now, anything that's sub-dollar, right? This is 74 cents, 73 cents, whatever. I have to buy at least 100 shares because I'm using Webull. And that's a $73 buy. So I don't want to do that. But I will trade it if it goes over $1 or if it goes down to like 20 or 30 cents. Absolutely, I'll trade that. The problem on this smaller account here, this isn't the 50K one that's connected here. This is the, I got about $400 to trade with. So I don't want to blast through it all on one trade. So, so right here, this one doesn't have a positive slope on the moving average. So I'm not going to look for an entry right here, even though, we're getting a lot of confirmation that it should be a good buy and all that good stuff. I just don't like it. I do like how small the risk is. So we've got a level. Oops. I hate that sometimes. So basically we got the entry threshold was $4. We got an 11 cent risk. So 22 cents would be the profit. So 422. Now I'm not trading this one. I'm just walking you guys through what the setup would look like, but we need a positive slope on that moving average for the strategy that I teach. And then what we do here, right? This would be the hard stop. This would be the entry level. And that's on a break over this red candle here. And for those, just as a curious mention here, for anyone who follows the strat, right? I know you guys have been asking a lot about that. This is essentially a form of that. So if you look at this right here, what you've got is a 3 candle, which is one that, I'm sorry, this is a 2 candle. I apologize because it's breaking down into the previous range, followed by a 1 candle, right? Because this candle exists entirely within the range of this candle. And then you've got a directional break, so 2 candle up straight out of that. So it's 2, 1, 2, right? So nothing super complicated. You don't have to get into numbering the candles, knowing all the rules and stuff. What I'm teaching is basically the same thing. It's just a modified form of it that adds some filters in and stuff like that. And because we didn't have that positive slope on the moving average, this is high risk, which is why I didn't take it. But you can see right here, that would have been the stop, and we could have just moved on to the next trade. So, but we didn't take the trade, so we don't have to worry about all that. All right, so I'm just going to kind of peek back through these real quick. NISN, it looks like garbage. There's no, like this needs to move. It's got to go. It's got to have volatility within the candles, and I don't like seeing all these wicks, so that's not a good sign in my opinion. So VEV looks like it's probably going to be our best candidate for a deeper retrace, but yuck. All right, so then the next thing we can do is just kind of look at some others here. So basically what I want to do is just kind of filter out anything that's over 30 cents on here for this size account. So like QLGN, it's good. So I'll add this to the list as well. And I'm looking for a very specific setup here. I want to see a tiny red candle, a positive slope on the moving average, tiny red candle, and then a larger green candle to overtake the top of that red candle's body. Okay, so let me find an example here. So this right here is perfect. Okay, so right here, if you look at the green number right here, for example, this is the moving average. It's only 0.001, but it is technically a positive slope, so I'm okay with that. Now that isn't necessarily going to be positive until this candle forms, which is kind of the fallacy when it comes to backtesting. So maybe this was flat, maybe it's a higher risk trade, but the risk size right here is stupidly small. And that's really what I care about. I don't really care too much about, you know, having every single rule in place. But this risk right here is like 0.5 cent, which is amazing. And then you just do a 1 to 2 take profit or somewhere around here, right? That'd be, I guess, $33.99, right? Because it's 1 cent roughly, right? So that would be the take profit. You lock in 75%. And then you've got a 5 candle series in place. So every single candle with a range of 5 or more candles has a higher low on than the candle before it. So in this case, you got a low here, you get a low here. Now this low is higher than this one. This low is higher than this one. This one is higher than this one, so on and so forth for 5 or more candles. And then you place well, I can't say you guys, I can't tell you what to do, but I place a stop loss for 75% of my shares at this level. So there's 2 75% take profits where I reduce the position size. Okay, so this one here is just that 1 to 2 take profit ratio. And then another one for every time I get a 5 candle series. And then in this case, it plummeted and hit the stop loss. So you'd have like 5% of your shares that would have stopped out. And that risk range on those 5 shares is only this big. So you're only risking 1.6%. So not a big deal. It's not the end of the world. But you've locked profits. You've locked almost 3% on 75% of the shares, and then 4.5% on another 75% of that 25% that was left. So that's kind of the strategy that I like. It makes it very, very easy to identify when and where to take profits. Like right here, for example, if we had an entry, which we don't, so it's okay to just let it go. We have a 5 candle series. So if I just draw a line at the low of each candle, right, you can see there's no candles here. So this is the first low. Then we've got, where's the, God dang it, I just want to move this line. This low is higher than this one. This low is higher than the one before it. So not till this candle closes, right? We got to leave it down here until this one closes in 6 seconds. But once this closes, that will then be the higher low. And your stop loss for 75% of your shares would go right here. Okay, so it closed. So now your stop loss would move up to this candle's low. All right, and then as soon as it breaches, like right here, if it just broke down below that line, you would have locked in 75% of the shares. So enough of that. I don't want to get too far off the rails here, but I just wanted to show you guys that stuff. So right here is an ideal candidate. So this candle is still open. Okay, so it just opened. Now the initial entry, like this is a good opportunity right here, right? So let me just do we'll do maybe $30, right? So I'm going to go ahead and enter this because we've got entry threshold right here. We've got the lower of these two lows, right? The stop loss goes here for me, right? And I got to be prepared to stop out because this is kind of pulling back a little bit. So let me just draw the setup here. Okay, that's the setup. And I don't care if this level gets touched. I just don't want the level, I don't want the price action to go below that. Okay. And then I'm just going to set a 1 to 2 take profit. And when this happens, I'm going to either sell 10 shares at this line, or I'm going to sell 7 shares at this line. Okay. And right now I've got 1, 2 candles potentially with higher lows. This is number 2 in the 5 candle series. I don't have a 5 candle run yet. So there you go. I'm out. No questions asked. I'm out. Screw it. There's no point. But this was a successful trade for the strategy because it has a positive MA, positive slope on the moving average. We got our tiny red candle, super tiny risk. It's a 10-cent risk, appropriate position size for it. And we entered roughly near where the entry was, and we respected our stop loss. And we had a predetermined target. So that one, sorry, successful trade. Even though it was a loss, it was a 10-cent loss times 10 shares, so $1. Not the end of the world when you're looking at 30% profits and stuff like that. So right here's another one. I'm going to try to get in as close to this level right here as possible, and then that will be my stop loss. So if we get it, now in theory, I should just jump into this, right? Because it's still pretty good, but I'm going to try to enter right here. All right, so I got a wide fill anyway. So either way, so let's move that up. This becomes my risk, and then this will just kind of bump up where I take my profit is all. Right, so right there. Okay, and I can't see what I can't see what it is. I'll just do like a 10% target or something because I can't see what that middle. Oh, there we go, 1 to 2. All right, cool. So now I have 3 shares in this. This is a hard stop. So as soon as price breaks below this red line, I don't want to be in this trade. I teach all the concepts behind why each of these rules is in effect. But let's look at this trade. Right, we got a positive slope on the moving average. We got a super tiny red risk. Now, granted, I got a higher fill, so that's expanded a little bit, but it's still pretty good risk for what it is. I'm trading the 1-minute low float garbage stocks in the morning within the first 15 minutes. So I got to manage that risk. And also, let me just make sure I'm still unmuted on my other screen. All right. So 1 of 2 things is going to happen at this point. It's either going to go up or down, right? I don't care which way it goes because I have a plan for both. If it goes down, I lose maybe $1.40 something, $1.26, I think, because I got 3 shares. 42 cents times 3 is, $1.26. Or it goes up, and then I make 84 cents per share, which is $2.47. So net positive. All right. So I'm just going to extend this over here so we have it. And you can always kick this up to the higher time frames. You can do 5-minute, you can do 10-minute, 15-minute, you can do weekly time frames. It's all the same concepts, and it's all relative to the time frame. So actually what I'm going to do here is I'm just going to leave that on 3. I prefer to have this left at 3 just in case it pushes down because I want to immediately stop out if I have to. But if it goes up here, sometimes it just goes higher and you just get more profit. So I don't really care too much about adjusting this to the 75% lock. More so just catching it on the way down here because I want to be 100% out as tight as possible. As soon as this gets invalidated, it's up to me to cut that risk as fast as possible. Okay. And then I'm just going to glance over here at QLGN. So these are good entries. If I was using Beacon, that'd be great, but we didn't get anything off the moving average. So I can always wait for a pullback. Just going to go ahead and keep an eye on these. And again, you can set a bracket order for these. I just don't like doing that on these low float guys because the spreads can widen up as soon as the volume kind of dries up, and then you get like the price will be here and you'll get filled at your stop loss. And I just don't want to deal with that. All right, so negative slope, don't even need to look at it. Negative slope, don't even need to look at it. Negative slope, positive slope, I have shares. And then a positive slope, but the price needs to come up here. So I'm only really looking at these two right here. Now this one is a sub dollar, which means I need to at least get this ready so that it's always going to be at a minimum 100 shares. And then this guy right here is just kind of hanging out. So it's just how they do it sometimes. And if you're someone who's a little bit more trading view oriented, you can use the trade widget, and you can enter your limit orders and all that good stuff. I don't like to do that because there's just a lot of moving pieces over here, and it's hard to demonstrate for you guys. It's just easier to hit quantity and then buy or sell, just so you guys can kind of see the concept. You can also, alternatively, you can kick over into Webull here. Let me just take a look at that real quick. You can also kick over into Webull and just create your orders here. So like if I wanted to set a bracket on PFE, for example, I could do close by stop loss take profit, and then I could set a bracket. Now it's a different account, so I'm not going to do that. But you guys get the concept. All right, red slope, red slope, red slope. No entries on any of these, right? And what we're doing is we're filtering out all this garbage so that we don't have to worry about, when do I enter? When is the bottom? Am I right? Right? Doesn't matter if you're right. It's how small can you make your losses when you're wrong? And then are you in position when it's appropriate and you are right? And then how do you take profits? That's what it really boils down to. Like you can see this right here. It's high risk. Like there's no need to necessarily trade this. I could, obviously we had a super tiny risk right here, which would have stopped out. We're just too far above the moving average for right now. The price will come back to it. Now the moving average isn't the end all be all, of course, but it is a higher likelihood of reversion the longer it stays away from the average, right? And that's just because this is average. This is where the price kind of typically finds its resting place. So when you see stuff like this, it's okay to just let it go. It's not a big deal. You don't have to chase it. You don't have to, be that bass that chases the shiny lure because they're going to yank into the boat and that's it. It's game over. So we can watch it. We can always look for same setups, right? Like this right here is a decent setup, but it's so far away from that moving average. I just don't trust it. So we can always wait. We can always be more patient. That's the rule in the market. I'd rather have a setup down here, or at least the moving average to come up and meet that, and then try a continuation. I don't want to fight so far above the moving average. All right, negative slope, but the price is kind of coming into it, which is potentially good. Now, if the moving average has a slope like this, a negative slope, I still don't want to take an entry just because it's down here, right? Because what happens is you get these little pullbacks like this, and then the price continues to sell off. So there's no point in trying to just catch it, right? You might as well just wait till the price is already going in the direction you want. And, just have some common sense rules in place. And that's why we're here. Toyo, negative slope. Don't even need to look at it. CGBS, negative slope still. Don't need to look at it. And then this one is, this one's probably halted. I should probably check the, let me check that actually. Yeah, suspended. All right. So it looks like an LUDP halt, which is fine, right? Because we don't mind getting stuck in a halt on the way up so much. Now I am going to go over to the Nasdaq site. So for anyone who doesn't have that, it's over here. And you could see the resumption quote time. That's 9:44. So let's see when this, or I'm sorry, that's the halt time was 9:44. They just put the same time in. So 9:49 in theory, 9:49:54. So this should be done any second. What time is it in this candle here? I don't have a second. Oh, here we go. Down here, I have a seconds clock. So within the next 30 to 40 seconds, this should open back up. So what I'm going to do here is I'm going to keep this on 3. Okay, and this is something that I think a lot of people hurt themselves with when it comes to halts. I'm going to keep this at 3 because remember, if the price breaks below here, I want to stop out as fast as possible and reasonably as possible. Because when that unhalts, it's going to be up here or it's going to be down here. And a lot of people, like, price will pop down here and they'll be like, oh, it'll come back up. That doesn't always happen. I'd rather just take the accepted risk and move on with this low float garbage rather than trying to force it. Okay, so right now, since it's above, now I can look for take profit. So I sold 2 of my 3 shares. Now, granted, I got it down here. That's okay. well, 938, I think I said it filled, right? So now I've got a 5 candle series in place. I've got, if we just look at this really, really closely, if I can do this in real time, 1 candle, 2 candle, 3 candle, 4 candle, 5 candle, right? So this is the 5th candle in the series, but these are above my take profit. So this is the one I want to pay attention to. 6 candles, and then this one isn't closed yet, but this one is. So what I'm going to do is I'm going to take my stop loss, since I only have 1 share, and I'm just going to put it right there. And then this way, if the price breaks below this candle, I don't need to be in this trade. I can always just back out. Otherwise, the price will continue to breathe, and that's what I want. I want to just let it do its thing. I don't want to try to impose my will on it. All right, I'm also just going to check these real quick. Toyo and CGBS. So this is the only one that I think might have potential here for the morning. Now, QLGN is coming back. It's getting closer and closer to the moving average, but I really, really want one of those super tiny red. Why is this not on 2 charts? Oh, because I'm a dum-dum. That's why. No, that's not what I'm looking for. There we go. Sorry about that. The chart went full screen on me. All right, so this candle here is now closed. This one's open. So this becomes the stop loss. Okay, so it went from 930 up to 932. So I got to move this up to 932. Now, it's only 2 cents, but it's still a higher low, right? And we're all about rules here. You can see what this indicator does. This is market magic. This kind of automatically plots the, it does a background bias filter, and then it also plots where there's 5 candle series. So if you're not familiar with how to do this, this visualizes it for you. So right here, right, this candle closed. So then this becomes the higher, the stop loss. Okay. And then as long as this candle here doesn't break below the low of this candle or wherever its low is becomes the next stop loss. So we're going to capture a good chunk of this anyway. I know a lot of people see a big red candle and they're like, oh, I got to lock it in. You don't have to choke your profits like that, because what's going to happen is eventually the price is likely to get up here. Now it's halted, just halted. So we'll see where that goes. But I know a lot of people panic when they see a big red candle and they slam that stop loss button. And then it just does like 2 more candles that are just as big or bigger, and then they beat themselves up. So we don't have to do that. CGBS, it's still going down. Toyo's still going down. I'm just looking at the percentages for the day. Vev is kind of flattening out a little bit, but it's not on its way up. So I might trade this one. QLGN. Oh, this is beautiful. Okay, so this right here is what I like. Now, I need the price to get over this level, and then this will be the risk. So kind of a big risk here. For what it is, right? It's a 6, it's like 6.5% risk, but I'm okay with that. Right now, what I don't like is that this entire candle existed below the moving average, so we can always wait, but I'm going to go ahead and trade this one because I'm a psycho. So now I need the price to break over that, and then this would be a, let's see here, let's plot this out. This would be a 14%. I can't see because the drawing tool's in the way. That would be a 14% take profit, roughly. So a new high, basically. Now, I'm not going to trade this until the price breaks over this guy. If it doesn't do that and this candle closes below here in the next 10 seconds, there's no trade. I'd rather just wait for high quality setups and just pick the ones that come to me rather than trying to force them. All right, so that's not going to work. So now we're below the moving average. Even though it has a positive slope, there's no need for me to try to trade this. What I really want is a small red candle and then a big green candle, or some candle that breaks over the body. But this is weakness, so I don't need to be in it right now. All right, we are also approaching the 10 o'clock hour, so I got to be mindful of that because I do have to leave. And what do we got here? All right, so this is a positive slope, but we don't have a red candle here, so no entry just yet, but it is worth watching. Okay, and this is also a it's a 74-cent stock, so yeah, you know what, I'll do it. I'd buy 100 shares. So this is a high risk trade, so I'm not looking to actually enter until I see a red candle and then a green one with a positive slope and all that, but I am okay with this specific stock. I'm okay risking that kind of money on this portfolio. So it's a big position. That's what makes it high risk. if we get the red candle. So I know I don't have to look at this for another 45 seconds, right? Because there's no red candle, there's no setup. So I'm just going to go ahead and poke around a little bit. We're still below the moving average there. This is still halted. CGBS is still negative. It's got a negative slope. So is Toyo, and VEV is the only other one that's out there. So let me just go ahead and refresh that halt list. All right. So then 9:57:18. So that's when that should happen. So another 2.5 minutes, or minute and a half, I guess, those numbers. All right. So this might be our red candle. Okay, so in this case, this would be the entry threshold, and wherever the low is would be our stop loss. Okay, and I'm going to go ahead and hit the button if it breaks over this, the price of 76.49. So that's the opening price, the top of this red candle's body. Okay, so we got our positive slope. So our first checkbox is checked. We've got a red candle that's close to the moving average. I'm going to go ahead and get in right there. All right, that's it. Now I need to calculate my 2-to-1 take profit. So this is a 3%. So let me just go ahead and plot a 6% level. Okay, just about there. All right, so right here is a little bit risky, right? This is where we have potential to get stopped out. However, everything should go up at this point. That's the idea. If it stops out, it's okay. But we should go up. We should lock 75% right here. So 75 shares. Smitty, check your device. Oh, I guess you can't hear me. Sorry. Can everybody else hear me? Jag. All right, NISN is open. Okay, so this candle here closed, so we're going to move that up. So you guys see what happens when you cut your profits? Something else. Sometimes it sucks. All right, so let me go ahead and do that as well. As soon as it breaks over 81.20-ish, or sorry, 81.26, we'll lock those profits. Does this strategy make sense to everybody? Do you guys see how like consistent we can be with it? Even if it's losses, it doesn't matter. It's the profits that matter. So. But what I'm doing is I'm guaranteeing myself a net profit here when I lock in those 1-to-2 ratios. So like right here is a 5-candle series. After I lock this in, then I can use the 5-candle run. All right. So we stopped out of this one. It broke. Yeah. Okay. So it broke below this. I just didn't catch it. So I just stopped. I'm out. So net profit is somewhere up here. 36%. Not bad, but not great. This one here as well. I'm going to lock 75% because we breached our 1-to-2 ratio. Now I can move the stop loss up. Now I have 25 shares left, okay, which means I got to lock 75% of that. So 19 shares. So I'm just going to look to lock 19 shares. All right. And that's if this red line here breaks. Otherwise, I still have my 100% stop loss right here. Okay, so this is where all my shares will stop out. This is more of a partial stop, and that's going to be right there. So this might hit right here. It might not. The recording will have the audio plus. All right, because I was typing, I missed that. So let me just lock in that. And then I've just got 6 shares left. So let me just boop. And then this will be for the, either we'll get another 5-candle run above this. We'll come down and hit our stop loss, or we'll get a higher validated low, at which point I could just move the stop loss up. So this is irrelevant now because we locked our profits right here, or should have, right? I was typing and I missed it, but that's where we should have locked in those 19 shares. This is where we locked in 75 of the shares. And this was our entry, so we can erase that. So the only line that matters right now, I can even get rid of this moving average for right now. I can also get rid of beacon, right? Nothing else matters right now except for this red stop loss, okay? This is my 100% stop, okay? And what I'm looking for here is for the price to form a low and then push back up. Okay, I need a higher validated low. And to turn that into objective criteria, I need 2 candles to the left of that low and 2 candles to the right of that low to have a higher low on their candles than the one that's isolated. That's the higher validated low. So if this candle pushes up after this, like the next one, so the candle after this and the one after that don't break below the low here, which is this number right here of 76.50. Okay, this becomes a higher validated low, at which point I can move this stop loss up to that level. All right, but for right now, it's down here where I entered. This is my original stop loss. So I've had 2 take profits setups, and now I'm looking for a third just to move this up. Now, as these candles form, if we get another 5 candle series, I'll lock in 75% of the shares that are left. It's just an if then. It's a big flow chart. So if we get a higher validated low, I move the stop loss up. If we get a 5 candle run, I move the partial stop loss up. And that's it. And then that lets the price breathe. It lets higher lows form. It lets impulses happen. And more importantly, it lets me not have to guess because I suck at that. This probably will be the last trade because I do have to get going here pretty soon. I'll turn the moving average back on for you guys so you can kind of see it. So there's no setup on this chart, right? There's no, for the strategy I'm talking about anyway. There's obviously some pretty good setups here, but not for the one I'm teaching. NASN, we locked our profit, we moved on. Does this part make sense? And they had 3 shares, so we had a 1 to 2 take profit, and then the 5 candle run took our last share. Okay, if we had more shares, we'd probably still be in it, looking for the same thing, a higher low, but we don't have that. CGBS, negative slope, no entry, no losses. Toyo, negative slope, no entry, no losses. VEV, we had our entry, we locked our profits, we locked a second take profit, and we're looking for a higher validated low. So in 40 seconds, if this candle here, apologize guys, if this candle here doesn't break below the low of this candle, we have our higher validated low, and then we can move our stop loss up. Is anyone confused about any specific piece of that? All right, so this candle broke below this candle's low, which means this is no longer a valid candidate. Let me just get this ready because it looks like it's going to sell off. So therefore, this is not a higher validated low, nor could it be, right? Because it can't have 2 candles to the right with higher lows if the candle that's 2 candles over is lower than it. Okay, so no higher validated low. So we just hit our original stop loss on 6 of the 100 shares that we had for like I think it was a 3% loss or something. No biggie, right? You guys get the concept here. We're locking in most of our shares at a disproportionate profit a couple times, and then we're taking the small piece that's left and we're locking in a very small loss on it. Or, if you get a higher low, then that loss gets smaller and turns into a profit if it goes above your break even. So hopefully that makes sense. And this is all recorded as well. So right here, for example, this is a perfect tiny red candle. I would love this, but it's got a negative slope in the moving average, so no trade. Actually, let me erase all these drawings as well. Like this would be perfect if it just had a positive slope, because this is such a small red candle. I love seeing these. Let me erase these as well. Now this one here, it could also be a good one. This is a 4.5% risk. I think the other one might have been like, it's this guy. I think it was. Yeah, it would have to be this guy because we didn't take any other setups. So just for the sake of demonstration here, this would be the entry threshold. This would be the stop loss. And then we'd have a disproportionate take profit. I don't know if that's accurate. It's probably going to be a little higher. That would kind of be the setup for the next trade if this red candle doesn't stay small. Now, if this one stays small, this moves down, right? If we get a green candle here that breaks over that, and then this comes down as well, because we just want to do a 2 times our risk range for that take profit. So for right now, that's the setup. Now this is a rough approximation. I don't know what the actual level would be. I'd have to do it. All right, so I'll trade one more. And then I'm going to have to jump off after that. But I'll just show you guys what it looks like. All right, so this is our red candle now. Ooh, that's a tight one. Whew. All right, that's our risk range. Okay. This is going to be a little hairy. And I'm looking for the break over the body. So not the candle, the body. Okay. And as soon as we get that, I'm going to look for an entry. And this one, I might expand that 1-to-2 ratio. All right, so we're in. And I'm keeping this at 100 shares in case I need to stop out. Yeah, that's what she said. All right, so just for clarity here, we got a 1.5% risk. So yeah, I'm out. Screw it, I'm out. So we hit our stop loss. It's just in and out. You know immediately with these trades whether or not you're going to get a move to the upside or move to the downside, as long as you keep that range nice and tight. And if it's to the downside, you know exactly what to do. You could just get out, right? If it's to the upside, great. But this was to the downside, so I stopped out. Now this becomes the next setup, right? Now that's if this candle pushes over this entry. And these still count because they are at the moving average. Even though they're bisected, that slightly increases the risk, but they're still valid for me because I just like them. What's most important is the moving average has that positive slope, and price is just overall going to the upside. Let's just take a look really quick. I have time for one more. Oh, that's beautiful. All right, so what I'm going to do here is I'm going to go ahead and take an entry in this guy. Okay, and let me just erase these drawings here. All right, so that's the entry. Okay, and then this is the stop loss. All right, and the setup here is these two candles right here. So I don't know if you guys can see that. It's these two in the middle here. This wick eventually did break over this body, so it would have been an entry. And then we'll see if this one actually breaks down below that. All right, we're out. See how fast that is? Just boop, I'm out. So the total risk there is about 3.5%. I don't care, right? I locked in a 35% profit elsewhere. All right, so this is a full candle below the moving average, so there's no entry on this. This is not a good candidate anymore, so there's no point in trying to trade that. Now, the moving average does still have a positive slope, so if price can come up here, give us another small red candle like this, we'll try again. Otherwise, there's no point in looking at that. Negative slope, positive slope, it's good. Let's look at QLGN. So again, this is breaching up, but the moving average has that negative slope, so I can't take this specific entry unless I'm using a different strategy. All right, so right here, another opportunity. Let's see if we get a break. All right, and then if you're ever in doubt, just run down that checklist for yourself. Does it have a positive slope on the moving average? Is it a small risk? And is the price breaking over that red candle, or is the price going the direction you want it to go? Or are you trying to guess? Because if you're trying to guess, you're not going to be successful consistently, and you're not going to be able to minimize these losses like we are. All right, let's see what the number is. 967, and the high here was 970. So yeah, that's an entry. So I'll go ahead and jump in. All right, let's go ahead and draw that. And then this is a, we'll do like an 11% profit on this one. And we'll make that green. All right, so what I'm going to do now is I'm just going to switch over here. What's going up today? All right, nothing good. Okay, now this is the account that's all been traded on. So we're going to look at our days realized P&L. So not a huge amount of money. It's $4.91, but it's green. We didn't have to do a lot to get there. Obviously, if I was trading with more of the portfolio, I'd have bigger results, but that's the goal. Just a little bit every day. And this is, of course, on the 1 minute on low float garbage. I'm out. It broke below that. I'm not even going to second guess it. I'm just out. So that takes that number down to $3.55. You can see the impact of a loss here is about $1, $1.40 on that particular setup. But that's okay. Right? I'm okay with that. Some days you get $40, some days you get $50, some days you get $130, some days you get $500. Now, some days you get $20 in losses. It's okay. What matters is that your wins outweigh your losses and that your trades are something you can have confidence in, like this. Let me just erase these lines here. Let me just draw the brush, right? So like this risk is beautiful, right? It doesn't have to be super complicated. We're just using a very simple strategy here. But more importantly, we're missing out on garbage like this. Like there's no reason for any of these to be entered on using a strategy like this. Now, there are obviously other strategies where stuff like this can enter on things like that. But for this specific strategy, if you're new, if you're struggling, if you don't like drawdown, none of these candles would have been an entry at all. Maybe this one right here for the entire day, right? That would have been it. And your risk would have been from there to there. So 11 cents. Okay. None of this beyond that should have been entered. Same here. There's nothing here that warrants an entry except for maybe this guy. Yeah, this guy. And then maybe this guy if you like the higher risk. And then this is all pre-market stuff. BEV, negative slope. CDBS, negative slope. All right, so here we go. I got time for one more. And then I really have to go. Let me just peep this one real quick. Oh, yeah, I like that. I like this one better. Now, I got a high entry, but I like this one way, way, way better. All right, let me just go ahead and plot that out. And then if this gets halted, I will just have to stop the stream, unfortunately, because I got to get out of here. But I just like this one way better. Now, this is a bigger risk. It's, like 7, it's almost 8%. So what I'm going to do is I'm going to have a 15%. Oops. I'm going to have a 15% take profit on the that first 75%. So the first 75 shares is going to get sold up here. All right. And if anywhere in here we get a higher low, a higher validated low, I should say, I'm moving my stop loss up no matter what. Okay. My first goal is to minimize risk. So if we get a higher low right here, for example, I'm moving the stop loss up. I don't care. Because in theory, if it's going to go up, it shouldn't go down. All right, let me just take a look at this one real quick. Yeah, there's no solid entry on that. But I do like this one. Let me just zoom out a little bit too. You don't want to just look at, you don't want to have your chart always look like this where you're just looking at specific candles, because you got to have that big picture view as well. Plus it feels better. Like you're going to get stressed out if you're just looking at single candles. There we go. So that'll be where I lock that. And right here, we've got 1, 2, 3, 4 candles. So we need a 5th candle to open and close with a higher low here for that second take profit. Now that's only really active once we hit this level, which we just did. So now I'm going to shift this down to 19 shares. Okay, so we hit our first take profit. And if I switch back over here, you can see that basically doubled our realized profits for the day for the small account. And then we've got 1, 2, 3, 4 candles. So again, we just need this candle to close, another one with a higher low to open, and then we've got our 5th candle in the 5 candle series. And then that one becomes valid for the that partial stop loss that we can move up. Then you can see right here on Market Magic, it's showing us that there's a 5th candle in play. That's what that yellow line and the dot means. Oh, excuse me. It's kind of funny that this thing told us to get in here and we got in after the little pullback and then continuation at the same level. That's pretty cool. All right, 1, 2, 3, 4. This is the 5th candle forming. So if this closes here with a higher low within the next 25 seconds, that's our 5 candle series. And then our stop loss, our partial stop loss, whoops. Let me just bump this down to 2. Our partial stop loss would go right here. So it's not in effect yet, but I'm going to move it up here just so we have it. And this green line here, this initial take profit, that's out of the mix. It's already hit. There's no reason for me to keep it on the chart. I'm just going to keep things nice and uncluttered. I'm going to get rid of the entry level as well. All right, so 1, 2, 3, 4, 5. This candle is now closed, which means the 5 candle rule is in effect. So as this pushes up, I'm going to move this partial stop loss up. And as soon as it's invalidated, I'm going to sell 75% of what's left. There we go. So as soon as it broke below that, I hit the button and I have 6 shares left. Okay. And now at this point, right, there's only 2 things that can form, either a higher validated low or another 5 candle run. So if either of those 2 form, I either put another partial stop in place, which I'm removing that one because it's hit, or I move my full stop up to that higher validated low. And if those don't happen, the only other thing that can happen is the price comes down here and hits my stop loss, and then I'm just out. Does that make sense? So we're almost $10 for the day. That's not bad. For only risking, I don't remember how many trades we did. Sorry. So this candle right here is not a valid candidate for a higher validated low because we've got 1 candle to the left and only 1 candle to the left with a higher low. So this one is not valid because it can't be an isolated higher low. So that means we need at least 5 more minutes worth of data in order to form that. So we need 2 candles and then a low, right? And then 2 more candles after that to validate it. So that would be the next instance of a higher low. This doesn't count. I don't care about this. And by scaling out, right, what we're doing here is we took 100 shares. We locked in 94 of them already. What that does is it allows us to feel less stressed about the remaining shares. So when it's time to move that full stop up, it's usually not the full position. That's usually just a small piece of it. And that allows you to have clearer decision making. Right. So at this point, I'm only looking for 2 specific patterns. It's either going to be a V shape or a straight line. So in this case, we got 1, 2, 3 candles with higher lows so far. We need a total of 5 before we do that partial stop. Otherwise, we need that V shape to validate a higher low. And then I move the full stop up. I know I'm repeating myself, but I want everybody to hear it the right way. Like, if that makes sense. Brother D says, so if that candle closed lower than the previous, is it a higher validated low? Oh, you know what? Actually, I got the perfect tool for this. So let me just move this over here so I don't expose my project flow. All right, so here's what I'm looking for at the end of the day, right? So we already hit our predetermined take profit at our 1-to-2 ratio. Okay, we already got that. It's out of the way. The lines are erased. 94% of the shares are gone. 75% disappeared here. And we also hit this one, right? We hit the 5 candle run. The stop loss moved up and then it got hit. So we locked in 75% of what was left. So this is out of the way, right? Unless another one forms, it's out of the way. For a higher validated low, I'm looking for this. I need a low to form with 2 candles to the left and 2 candles to the right that don't breach below the low of that candle. That's the higher validated low. And that's where my full exit gets moved up. So in this case, this candle is a candidate, right? Because the 2 candles to the left of it are higher as far as where their lows are, the bottom of their wick. So basically an easy way to do this is you draw a line and then you see where the price breaks below it. Okay, so in this case, it's not the last 2 candles, which means this is a candidate. Now it needs 2 more candles to the right to do the same thing and just stay above this low of 48.64. So basically, if the price can stay above 48.64 for the next 2 minutes, we'll have it. Or equal. Now this is 48.54. So this candle then becomes the candidate. Right? It's kind of hard to see because I'm zoomed out, but you guys can see that this low is now lower, right? So right there. It's hard to see because the prices are so skewed. You see that tiny little gap right there? Well, now it's lower, so it doesn't matter. But you guys can see this new low that's forming is the candidate for the higher low. It's got 2 candles to the left. It needs 2 candles to the right that stay below that low. And what that does is it allows us to let the low form and validate before we take action. Because if we just try to guess where the bottom is, like if I guess this was the bottom and I move my stop loss up, I'd be out of this trade. And while that's great for securing safe profits and stuff, it's really, really bad for allowing continuation And that can become stressful for a lot of traders. And I have the experience and the patience to just let it move naturally. And it's only 6 shares out of 100. So I'm just going to let it do its thing. And I'm going to let that higher low form. Then that's just the more efficient way to trade. Does this part make sense for everybody? I will have to end this recording here pretty soon. But there's 3 take profit stuff, right? The first 2 are always 75% for me. And you get I guess I should preface this. Like, I can't tell you what to do. And I don't want anyone to just blindly copy my trades or my strategy, because it might not work for you. Because either you might apply it to different stocks, you might apply it to a different mindset. Like, you might have a different risk tolerance. You might have a different set of behaviors and impulses, So maybe you stumble on this part quite a bit, right? Like, maybe you can't quite let your profits get to that first take profit, or maybe you have trouble identifying these. Maybe you're using Heikin-Ashi candles, for example. This would always happen if the price goes up. Whereas regular candles, it happens infrequently. And then this always happens, but it would be harder for it to happen on Heikin-Ashi because the price would require a different structure. And it's important to clarify that this setup's here, and what we're probably going to see here, this candle doesn't necessarily have to be higher than the one before it. As an example, it could be down here. What's important is that all 4 of these candles, this one, this one, this one, and this one, are higher than this guy. So this could be up here, it could be up here, it could be right here next to this one, it could be below here. As long as it's above this guy, that's all that matters. And in about 8 seconds here, we're about to find out. So I'm going to move that in anticipation of that. And I'm going to go ahead and move that up. Okay. So now this candle, this candle, this candle, and this candle are higher than this guy. So this is the higher validated low. Therefore, I move my hard stop, my full stop loss up to this level. Does that make sense? And what this also does is it starts the chain, right? This is 1, 2, 3, 4 so far in a 5 candle series. Now we need that 5th candle obviously to open and close with a higher low, but that's a pretty easy pattern to identify. And these 2 are equal as far as the logo. If they're equal, it still counts. It's still equal or greater. So this is still a valid 5 candle potential setup. So in the next 2 minutes, we'll know. Right? VEV is popping over. Sorry, I'm just trying to peek around here real quick. This one fell off. So again, just staying out of stuff is most important. Like, there's just nothing here for us to trade. So I hope nobody's just blindly buying stuff. This one here would have been a good setup. It would have stopped out, but it's at least somewhat. Oh no, sorry, it's got a flat slope. My bad. So that wouldn't have been an entry. I apologize. Same here. It's got a flat to negative slope, so there's no reason to enter that. Same here, so on and so forth. Right? We're just keeping ourselves out of the muck, the crappy stuff. Charlie, I'm definitely not strong in working continuation. This is helpful. Well, thanks. I'm glad it helps you too, Brother D. Thanks for asking questions and stuff. And again, this strategy isn't the end all be all. It's just it's just what I use. And more importantly, I just want to make sure that it's explained in a way that makes sense to you guys. All right. So right here, 1, 2, 3, 4, 5. So this is where the partial stop goes. Okay. So I'm going to make that nice and thin. If this gets invalidated, I'm going to sell 4 shares, right? Because I'm just continually breaking down fractions of what I have on impulses. And then when those impulses end, like right here, for example, we essentially snipe the top in a lot of cases, because when they pull back harder. And then when there's higher lows, we're just letting it breathe and moving our stop loss up. So it might only seem like, oh, it's only 4 shares worth of profit. It's $2 worth of shares. But when your account gets bigger, that scales up nicely, and it doesn't matter, because what you're doing is you're taking these super small pieces of your portfolio and you're exposing them to the smallest possible risk. And then you're taking small pieces of the portfolio and exposing those to the bigger risks. So there's a nice little equilibrium in there if you can do it the right way. And as far as continuation goes, I haven't had to guess or make any decisions here other than just listening to what the chart tells me to do. And that's just because it happens to fit the strategy that I use, right? So if your strategy is different, I'm fully confident your strategy can work, but 90% of the time it's an execution thing. It's always mental. It's like, I'm going to compromise my stop loss a little bit here. It'll bounce back. I'll sell on a pullback, blah, 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 blah. You know, you guys all know how it goes, right? You've all been there. I've been there. It's very rarely a technical thing, which is why I don't like seeing a lot of people focus solely on technical analysis, because this doesn't have to be complicated. Like, it could literally just be buy a green candle, stop out if it breaks below it. You know, like that could be your strategy, but your ability to execute that in real time can be very, very difficult. So that's why we're here. We're here to learn the psychology stuff too, and the position management, and you know, every other little piece that goes into it. All right, so this candle closed, therefore my partial stop moves up, and now we just watch paint dry. It's going to keep going up until it doesn't, at which point we'll lock 2/3 of what I have, because I can't break that up into 75%. And then the full stop, like as this goes up, right, it goes into a certain type of mode. Okay, right now it's just impulse mode. There's 5 or more candles that are going straight up, so I'm going to let the impulse form. Now, a higher validated low can't form during an impulse, so I don't need to worry about moving this up or trying to find higher validated lows, because these all have higher lows. So there's no reason for me to try to do both at the same time. There we go. So I'm out. I lock 75% or 2/3 at this point. Now that impulse is over. The technical impulse has ended. It was from here to here, and it just ended as soon as the price broke below this. Okay, so now we start looking into the higher validated low stuff until the next 5 candle sequence forms. So right now we're in bottom hunting mode. We're looking for a higher validated low, and we're paying attention to this red line. So I can erase this guy, and what we've done again effectively is snipe the top. Right, we sold on or around the top candle without having to guess. We're just letting it kind of progress naturally. Now, if this sells off harder, we get to look like badasses and say, oh, we picked the top candle and we sold, right? Even though it was only a couple shares, it doesn't matter. We still let the chart breathe. We bought near the bottom, we sold near the top. That's the goal for every trader. And we didn't have to guess. That's the best part about all this. Right? Now, I've laid out all the rules for you guys that I use, and we've walked through several examples. Some were losses, some were wins. We have a disproportionate win for the day, right? We're up here at $9.99, almost breaking 10 cents. I'm just going to go ahead and sell that, actually, because I have to go. But you guys get the idea, right? We'd look for a higher validated low, move the stop loss up, look for the next 5 candle run, move a partial stop up. In this case, I only have 2 shares, so I'd sell 1 on the invalidation of that, and then a higher validated low, blah, 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 until you run out of shares. Like, that's really what it's about. You're just looking for ways to offload your shares. So in this case, $10 for the day, not bad, right? We didn't really put a whole lot of money into it. And a $10 return, sorry, on a bunch of $30 positions. And then I think we had like 1 or 2 $75 positions on this guy, CGBS, or maybe we had 1. I don't remember exactly, but I can recap it later. But what's more important is we skipped out on so much garbage just by not trying to force things. Now, if we look at this here, for example, the moving average is 254. I got it right here. 254, 254. So these are flat. There's no trade there. 254, 255. So this is an entry right here. So that would have been the entry. That would have been the stop loss. And then a disproportionate take profit. You can just repeat the whole process over and over and over again. Because it's the same set of rules. So if I'm not going to trade it, but if you guys just look at this, right? I'm not saying it's going to win every single time, but what I am saying is that when you lose, it really doesn't matter. Like, it's not the end of the world. You're taking a 3% loss, a 1.5% loss here and there. But you guys saw we also had a 35% profit, and we didn't have to guess. Like, we didn't have to try to predict anything. We didn't have to do anything crazy or irrational. Like, I can take this set of rules and go explain it to someone. Like, I like to pretend that I'm working at a company, right? And if my boss is looking over my shoulder, I can explain to my boss exactly what I'm doing and why, if it's his money, you know, because that's essentially what we're doing. We are our own company here. I can explain exactly what I'm doing with my money to the point where he can understand exactly why, right? And that's what I want for all you guys, is for you to come up with your own strategy or take pieces of other strategies and build your own plan that's not just technical analysis, and then be able to have that same confidence in your trades and the ability to execute it consistently. So who can tell me what's going to happen right here if this price gets to that green line of 268? I'm going to end the recording here, by the way, because I gotta jump off, and I don't want anyone to watch dead space on the on the recording.